Hey all, welcome to ShareTrek. This is Raj here. Today let's talk about Editas Medicine. We have not looked at this stock for a while now, and since they recently announced their quarterly earnings report, we should have some updates as well. And also I would like to apologize for not having looked at Editas for a while. Basically my focus has been more on CRISPR Therapeutics and Beam and Bluebird, and that's where the actions are all happening. So it's high time I looked at Editas, and thanks to Inf for reminding me that we had to take a look at Editas. So Inf, this is here for you. So with that said, let's get started. Welcome back, friends. If we look at Editas Medicine portfolio, we see three buckets: ex vivo, in vivo, and licensing. We find Editas 301 for sickle cell disease as the lead SCD and TDT therapy, and it's in two parts. Both of them are called Edit 301. Edit 301 for sickle cell disease is a bit ahead, whereas Edit 301 for TDT is a bit behind. So it's difficult to determine when they will be close to approval because they plan to commence parallel dosing in Ruby trial for severe SCD and remains on track to dose 20 total SCD patients by year end. And they said that they are on track to present a clinical update for Ruby trial by mid-2023. And when it comes to Edit 310 for TDT, they are slightly behind with being on track to dose the first patient in Q1 2022. So before March of this year, they should be dosing their first patient. The trial data is due by year end. So as I said before, unless CRISPR Therapeutics has a major stumble, I don't see Editas capitalizing much with sickle cell disease if they get approved by next year end. Further, they say they are in early stage research for development of non-myeloablative patient preconditioning regimen for human HSC transplant, which is basically stem cell transplants. Non-myeloablative patient preconditioning regimen is a medical term used to describe a type of conditioning therapy used in stem cell transplant. This type of therapy is used to prepare a patient's body to receive stem cells from donor. The goal of the non-myeloablative patient preconditioning regimen is to weaken the patient's immune system and create more favorable environment for the new stem cells to engraft and multiply, which means taking away the old stem cells and creating room for the new stem cells. Unlike traditional myeloablative conditioning, which uses high-dose chemotherapy and or radiation therapy to destroy the patient's bone marrow, non-myeloablative conditioning uses lower doses of these treatments to suppress the patient's immune system and make room for new stem cells to grow. And as I have emphasized in my earlier videos when I was talking about Bluebird and when I was talking about CRISPR Therapeutics, conditioning system, which is conditioning regime, which is more gentle on the system, is going to enhance and improve the efficacy of the therapy because it's going to keep the patient in a much better state, and it's also going to be less toxic for the new stem cells that are being put back into the body. And we had a setback with Magenta, which was working with a genetically edited solution instead of a chemical solution. But unfortunately, it got stalled. But CRISPR Therapeutics is ahead of Editas when it comes to a more gentler conditioning system that they are working on. So in that count also, CRISPR Therapeutics has an opportunity to be ahead of Editas. So for the SCD or TDT therapy to succeed and be best in class, it needs a good preconditioning regimen. And as I mentioned, CRISPR Therapeutics is ahead of Editas, and here also Editas has to catch up very quickly. There is not much to talk about in their in vivo bucket except aspirational statements. They now have INK cell franchise this year, which is a positive thing because they have signed up with Shoreline Biosciences. Under the terms of agreement, Shoreline will acquire Editas Medicine's preclinical gene-edited induced pluripotent stem cells or iPSC-derived natural killer cell or INK programs, including Edit 202 and related manufacturing technologies. Additionally, Shoreline will license Editas Medicine's rights to proprietary SLEEK or selection by essential gene exon knock-in, as well as Cas12a gene editing technology. Their collaboration with BMS, like Bristol Myers Squibb, is ongoing with around, I think, 11 joint programs. Yeah, that's right, 11 joint programs. However, we know that big pharma can discontinue any program anytime, and we have seen that happen in the last 12 months. Novartis has done that, and a few other big pharma have done that. So I would always watch that cautiously. You cannot be very confident that all the 11 programs are going to go to the very end. And also they have to meet milestones, and we don't have visibility into that. So we don't know when the money will come in. Therefore, predicting the cash flow is a bit difficult. For the full year 2022, the company reported a net loss attributable to common shareholders of around 220.4 million, which works out to around 3.21 per share, which is an increase compared to the same period in 2021. So it's a loss of $3.21 per share as compared to $2.85 loss per share in the previous year. So things have not got better, but that alone should not deter us from looking at this company. Collaboration and other research and development revenues for 2022 were 19.7 million, which is a decrease compared to 25.5 million for 2021. And the decrease was mainly due to lower revenue recognized from the company's collaboration agreement with BMS. As I mentioned earlier, all these collaborations with big pharma for genomic companies is based on milestone payments. And unless we have very good visibility into the progress of the therapies in their pipeline with regard to the milestones, we will not know when the monies are coming. So in one quarter, suddenly you'll have a big jump, and in another quarter, you'll have a big drop. So that's the kind of thing that's likely to happen in case of most of these genomic companies. So I wouldn't worry too much about this increase and decrease. And when we look at the research and development expenses for 2022, it was 170.5 million, which is an increase compared to 142.5 million for 2021. This increase, they say, was mainly due to higher manufacturing and clinical related expenses, including costs related to Edit 301, as well as employee-related expenses to support clinical programs, and a one-time charge incurred as part of the company pausing internal investment in Edit 101. Again, out here, I'm not going to be concerned about increase in R&D expenses, and I think given the fact that we had around 8 or 9% inflation in the time period that we are talking about, and a lot of shortages, I think this is a pretty decent outcome, and I think they have done good cost control. General and administrative expenses for 2022 were 70.7 million, which is a decrease compared to 76.2 million for 2021. This decrease was mainly due to lower stock-based compensation expenses related to vesting of certain equity awards, as well as stock-based compensation expenses that were granted to former CEO and other employees in 2021 that did not occur in the year ended December 31, 2022. Again, good cost control measures. And here are some overall financial data points that I would like to talk about with regard to Editas. I have a bunch of slides I want to walk you through. This is going to talk about various ratios, financial ratios. We're going to take a quick look at them. So overall, so far I have seen everything. I'm pretty happy with Editas, except the fact that in sickle cell disease, they're not progressing fast enough to make a meaningful impact for their share price or valuation, in my opinion. So let's take a look at the financial data. Now here we are getting into the first comparison, which is the price to book ratio with regard to its peers. And I have compared it with peers like CRISPR Therapeutics, Intellia, Beam Therapeutics, and Caribou Biosciences, which are in our watch list. And when you compare to the peers, the peer average is 2.4 times price to book, whereas Editas is below that at 1.7x. And again, here I would like to highlight how good CRISPR looks at 2.1x. And you can see Intellia and Beam are at much higher than peer average, with Beam Therapeutics being 3.8 times. And again, friends, when it comes to price to book, all these multiples are a reflection of the expectation of investors on future income and future growth. And it seems like Beam has got a lot of hype going for it. I would like to see CRISPR Therapeutics growing very fast in price to book, because they are very imminent in getting approval for SCD and TDD therapies. Now let us look at their comparison with industry. The industry average is 1.6 times multiple for price to book, and Editas is at 1.7 times. Not too bad at all in this case as well in terms of valuation. Friends, next let us look at past earnings growth analysis. I just want to show it to you before I show you future estimates by analysts, because that will give you an idea of how Editas has been performing and what the analysts are expecting it to perform. And you can form your own judgments whether this is reasonable expectation or not, because all of this affects the valuation of Editas. In the last 5 years, annual earning growth has averaged minus 13.7% for Editas as compared to 26.8% for the industry. And Whereas analysts are expecting the annual earnings growth for 2023 to be negative 2.3% against the industry annual growth of 13.4%. So as you can see here, they are expecting a lot from Editas. And if you look at annual last 1 year growth, Editas was negative 14.5% and industry was positive 3.4%. And they are expecting Editas to do positive 29.9% while industry will do only 14.0%. So you can make your own estimates out here. I think the annual revenue growth can be achieved because of the BMS collaboration, the licensing income coming in, but I am not very sure about annual earnings growth. Next, if we look at the financial position in terms of assets and liabilities, their short-term assets are 5 times as much as their short-term liabilities. Really strong position out here. Long-term assets are way more than their long-term assets are way more than long-term liabilities. Again, this is looking good, but ideally it should have been better than this, like 1:2, but I'll take this anytime. Ownership breakdown. 81% of the shares are held by institutions, 17.8% by general public, and only 0.04% by insiders. So this is way better than what we have seen with the companies like Ginkgo Bioworks. So insider selling is not going to make much of a difference for the share price, whereas the number of institutional holders is pretty big. And as you know, institutional holders can cut and run anytime. And when it comes to institutional holders, there are 10 institutional holders. I have selected the top 10. Out here, it contains names like State Street Global Advisors, BlackRock, Vanguard Group. These three have more than 10% holding. And then we have Millennium Management, Woodline Partners, and Dimensional Fund. Actually, Millennium Management and Woodline are above 3%. Rest are all below 2%. So I won't read them except for JP Morgan, which is another big name, which is with 1.63%. The notable absence out here is ARK Investment. I would have expected them to be in the top 10, but they are not. So that's something that I would keep in mind. And then if I was to look at analyst price target, the 12-month targets for this share is pegged at $13.06, which approximates growth of around 40% to 45% in the next 12 months. So I don't know if this is going to be achieved because there are two things that could happen. Let us say CRISPR Therapeutics goes ahead and monetizes Exacel for both SCD and TDT somewhere around the third quarter of the year. What is the investor going to think? Is the investor going to think that the sickle cell disease area is crowded with Zynteglo and now with CRISPR Therapeutics, and that Editas, when it comes up with a therapy, it would have to fight really hard and it has to compromise on pricing and everything a lot just to get into the market, and in which case investors will downplay the value for Editas. Conversely, people can also say that a lot of sickle cell disease therapies are getting approved by the FDA. Therefore, the chances of Editas getting an approval is also going to increase, and Editas is going to monetize. Overall, CRISPR-edited therapies are picking up steam, and therefore Editas should be valued higher. I don't know how the market is going to think, because everything is a question of perception. In my mind, I think that the moment CRISPR Therapeutics comes out with its therapy, I think sickle cell disease market is a little bit compromised for any other entrants. And when Beam comes in with its superior offering, then Beam is going to be the market leader. Next would be CRISPR Therapeutics. Zynteglo is likely to be the third. And Editas has to fight for the place in there. This is my personal opinion. I'm not a scientist or an expert, but this is my personal opinion as an individual investor. Please let me know what you think. If you already have Editas in your portfolio, what are your thoughts if they are contrary to mine? And what are your expectations in case CRISPR Therapeutics get an approval for Exacel for both SCD and TDT by around third quarter of this year? How would you look at Editas? And again, I do not have equity dilution fears right now, as their cash runway is predicted to last until 2025 and they have negligible debt. And so that's one fear less for me on this. Somehow I have not had a lot of energy looking at Editas in the past, and That is my problem, not that of Editas, in a sense that when CRISPR is at the cusp of delivering an approved SCD TTT therapy for monetization this year, and also Zynteglo is out there and Skysona is out there, and they're all actually testing the market. They're enrolling patients. I'm more interested in seeing how Zynteglo is performing in the market, how payees are signing up, what is the patient experience, how many patients have they signed up, at what rate are they signing up, how many patients per month, what are the major challenges, are there financing available for all these patients, what is the experience of the patients. Those kind of things is what I am looking forward to. And in that backdrop, when I look at Editas, there is nothing much happening. I mean, they are still way far away from getting monetized, and I don't see any major milestones that I would be really excited about in this backdrop. And that's the reason why I dropped Editas, but I'll make sure that I look at them at least once in every couple of months to see how things are going. And that's all from me for now, my friends. And I would like to hear your feedback, and I'm always happy to listen to contrary opinions, so put that all in the comment section. And friends, I'm working on Patreon for the HIV group, because what I'm trying to do is reclaim the channel for genomics. We are doing genomics content 6 days a week, and we are also doing company specific genomics in these 6 days, and I've kept only one day, that is Friday, for HIV. But the HIV group also is looking for a lot of information, and I can provide them all that information, but I don't want to crowd this channel with bilingual videos. And I want to give you guys also a good experience, and I want to give the guys who are coming in for HIV information also a good experience. So the first Patreon is going to be targeted towards the HIV group. I would like to migrate them into Patreon, and from there into a separate YouTube channel where future videos will go in once our Patreon is successfully established, and all the HIV coverage will happen there. The existing HIV videos will stay here, and that's the plan. So that going forward, we will grow our genomics investment community in this channel. There'll be a separate HIV YouTube channel, and there'll be HIV Patreon channel. And once we cross around 5,000 subscribers out here, we may think about membership or Patreon, depending on the interest of the group, or we may just continue as we are doing. I'll be looking forward to your feedback. I would like to get a group of you to join me for a focus group, and we'll work those things out. But that is for another day going forward. Right now, the immediate idea is to stabilize each of the contents and user experience in this channel. So yeah, that's about from me. And if you have any feedback in this regard, please don't hesitate to put in the comments, because then it'll become a two-way communication, and I'll get to hear what you guys are thinking about. At the end of the day, I'm making these videos for you. I want it to be a happy experience for you, whether you're coming here for genomics investment, whether you're coming here for HIV data, doesn't matter. All of you are equally important to me, and I want to give you a good experience. So put your feedback in the comments below, and it will inform my decisions going forward. And that's about all from me for today. If you like this video, please press the like out there. And before I go, if you are one of those 57% who watch our video but have not subscribed, just ask you to subscribe. It's absolutely free. You don't have to pay anything. It helps the channel grow. Thanks and have a great day. Bye for now. Subscribe.